SoFi is actually down 33.66% in the past 6 months, but they're one of those stocks that gets a lot of hype at times. I'm going to do a full analysis on whether or not they are a buy, hold, or sell, depending on the situation. Now, there is some good news here. They actually added a record 1.1 million new members, which is now 14.7 total members, up 35% year over year, and that's from their Q1 2026 earnings report. Now, they did have segment revenue dropping 27% to 75.1 million, which is one of the main catalysts to why their stock is actually down right now. If you look at the past year, they're actually up 14.97%, but if you look at the past 5 years, they're actually down 25.65%. So you can see they were doing pretty well, it looked like, in 2021. Then they had a major dip, and they've been working their way back up, and now they had another major dip in 2026. Now, if you compare that to the S&P 500, over the past 6 months, it's still up 10.78%. Over the past year, up 25%, and over the past 5 years, up 81%. One of the reasons I bring up the S&P 500, of course, is because this is primarily a growth stock. So, of course, when you're investing, you have to figure out, do I want growth? Do I want dividends? What am I using this for? So this is usually one where if you're not going to be taking income anytime soon, you would look to get some long-term growth from SoFi, because they actually do not have a dividend at all. The problem is you might have been better off with the S&P 500, or you for sure would have been better off with the S&P 500 over the past 5 years. The question is, will that turn around, and is this a buy low type of scenario? Their PE ratio is at 39.15, which is not really it's not low. And when you compare it to the growth, it's also disappointing. Many other stocks have really high PE ratios, like AMD, for instance, but they have the growth to kind of justify it to some people, whereas many people still like to trade below like a 20 when it comes to PE ratios, especially if you're more like a value investor. Now, if you look at their year-over-year change for their financials here, everything is pretty much up. Revenue is up, operating expenses up, net income, net profit margin, earnings per share. So lots of good news in here. As far as the balance sheet, if you look at assets versus liabilities, I usually like to see a little bit bigger ratio from assets to liabilities, but they are kind of they're a banking related platform, so it may not be as necessary to have a good asset to liability ratio here as I like to see from many tech companies and stuff like that. If you look at return on assets, 1.28% is not too good. They're also down about 5% over the past quarter, according to Robinhood. Hedge funds seem like they're kind of split the last few quarters on what to do with this, although in Q1 2026, although the chart doesn't seem to show that as well with the ratio of the chart here. But if you look at the actual percentages, 12% buy, 88% sells, not a strong signal. You do have some informative buys, though, from insiders lately, but that's not necessarily a great indicator. If you look at what analysts are saying, you do have 26 different Wall Street analysts, and they're kind of split here. More of them have it as a hold than anything else. 30.8% buy is not really that bullish, and then sell 19.2% is actually higher than a lot of stocks that I review. Short interest seems to be going up over time. If you look at their earnings reports here, Q1, of course, they cut it really close. Now, they were beating for the most part pretty well up until that point over the last couple of years. They do keep raising guidance year over year, but we don't have the results for Q2 quite yet in this chart. Now, a lot of times I like to look for the EV to EBITDA ratio. Because they're in the financial industry, they don't really have a typical EV to EBITDA, so I'm skipping that in this one. If you look at the expected PEG ratio, that's 5 years expected, they have it right now at a 1.07 on Yahoo Finance, which is actually kind of a bargain because it's around that 1 mark. I would say typically under 2 is what you're looking for here. But again, that's just one small indicator. It's not something I would base my entire decision on. I also like to look at how employees view the company from within. It gives me an idea of how the leadership is. I actually like to look at what employees say about the company as well from within, because I think they'll have the best insight as to whether or not they are a company with good leadership. So if you look at the snapshot here from their employees. Really good scores all the way around, 4.2 out of 5 stars, 82% recommend working here to a friend. And of course, the one calling the shots gets 93% approval, which is a very high score. Another thing to consider here for your portfolio, because I cannot tell you in your scenario without having a lot of information whether or not this actually makes sense. And of course, I'm also not a financial advisor, so I can't legally do that anyway. But one thing to consider when you're deciding whether or not to buy, hold, or sell this is what is the sector that it's in. You don't want to have too much allocated in one sector, like if you're too stock heavy in tech or if you're too heavy in finance. This one is consumer finance or the financials sector here. So if you have like too many stocks that are in banking or something like that, you might not want to buy more of this without maybe selling some of the others. And then you'll have to figure out, of course, if it's worth doing that. If you believe in SoFi more than some of the other financial stocks. Now, if you read this article on Reuters here, they talk about SoFi's unchanged 2026 forecast eclipses record results, and therefore their shares fell, and that was at the end of April. So that's a concerning sign, of course. You know, you always want to see the forecast going up. Now, Motley Fool, back just a month ago, actually less than a month ago, said it might finally be a time to buy because it might finally be a reasonable price for SoFi. Now, apparently they did also lose a major client, which is kind of a bad thing because it's supposed to help diversify SoFi away from heavily relying on lending, and losing that client kind of hurts that, which investors are not a big fan of. Now, we had some other articles make really good points about how when you have a growth stock, one that actually exceeded expectations in 2025, if they don't continue that massive hype, you can see a pretty sharp sell-off because it's a growth stock, because you're not getting any sort of dividend. A dividend is usually something that it can hurt growth, but it also is kind of a stabilizer. Because of the way the economy is going, we don't have super high unemployment numbers yet. Of course, the way they measure that is a little shady, but that's another topic. Either way, if inflation continues to rise and unemployment rises, there are some people that are worried that if this continues, consumer credit will weaken and therefore hurt SoFi. So for a bull case, they have had 10 consecutive profitable quarters. Revenue growth was around 40% year over year. Member growth is really solid. There seems to be a lot of trust in the leadership there with their CEO. And because it has fallen quite a bit this year, it may actually be more of a bargain now to some people if you believe in it long term and you're willing to ride out the rough parts. The bear case, of course, here, the sell case or maybe even the hold case would be the way the economy is going, and losing one of their major clients may be not the best sign for SoFi. I still think their PE ratio is actually kind of high for what they are, and they've been extremely volatile in general over the past 5 years, whereas the S&P 500 has been pretty steady and fairly strong. So it's going to come down to, of course, what you believe in, what your goals are long term. This is a 100% growth stock. So if you are looking for something long term, you have to believe that they're going to turn it around and that this is a good time to either buy or hold what you have because you believe in it long term. If you don't believe in it long term, if you are scared of some of these things that I've just pointed out, the problem is you would be probably selling low depending on what you got it at. But of course, I can't give you that financial advice. I don't know your situation and only you can make that decision. Hopefully this was helpful, and I'll see you in the next video.